In this video, we'll explore about the settlement of running accounts for client funds lying with the trading member. Whenever you trade in the stock market, you often leave some extra money in your account with your broker. To completely prevent any misuse of these client funds, the market regulator, SEBI, has stepped in with a strict mandate. They have made it absolutely mandatory for all brokers to periodically settle or return this money back to you. When you open your account, you get to choose how often this happens. You can mandate the broker to settle your account either on a monthly basis or on a quarterly basis. Let us look closely at how this actual settlement process is carried out by your broker or the trading member. At the end of the settlement day, the trading member looks at your end of the day obligations. They carefully assess all the funds you have across every single stock exchange. After making sure all your ongoing trade requirements are covered, they settle your running account by returning the unused money. As we discussed, they do this based on your chosen preference of either monthly or quarterly, and they do not just pick any random day to do this, because the exact dates for this settlement are strictly stipulated and controlled by the stock exchanges themselves. To make this process incredibly smooth and predictable for everyone, there is a clear schedule in place. All the different stock exchanges act jointly to ensure there is absolute uniformity and no confusion regarding these settlement dates. Together, they issue a master annual calendar right at the beginning of every financial year. This comprehensive output document clearly maps out the exact scope and timing for all upcoming settlement dates, covering both the quarterly schedules and the monthly schedules for the entire year. Now, let us look at a very specific target scenario regarding inactive accounts. Suppose you have some extra money or a credit balance sitting idle in your trading account. If you have not executed a single trade or done any transaction for more than 30 calendar days since your last activity, the system flags your account as inactive. When this 30-day period of no activity is crossed, there is a very clear consequence. The trading member is required by law to take your entire unused credit balance and return it directly back to you. This 30-day inactivity rule is extremely powerful because it acts as a strict regulatory mandate that actually overrides your personal choices. For instance, imagine you initially selected the quarterly settlement option. Even with that choice on record, if you do not trade for 30 days, your quarterly preference is completely cancelled out by the inactivity rule. The broker must take action and return your funds on the very next upcoming settlement dates of the monthly running account settlement cycle. This rule applies no matter what settlement cycle you originally preferred, and it is strictly enforced according to the authority of the stock exchanges. However, there is one important exception scenario to this forced settlement rule. Let us say you were inactive for 30 days, but then you suddenly decide to execute a new trade just before that upcoming forced monthly settlement date arrives. Because you traded, you have broken the inactivity streak. In this case, the forced monthly settlement action is immediately cancelled. Everything goes back to normal and the settlement of your account simply resumes following your original stated preference, whether that was a quarterly cycle or a monthly cycle.